Hello everyone, this is Andrew McNair from SWAN Capital with our January 2023 SWAN report. In this month's video, we're going to discuss some recent headlines that actually influence the financial markets, but I want to distill this information and give you a perspective so that these developments that you're seeing in the market, you can utilize while you're investing and reallocating your portfolio. Now, please stay tuned at the end of this video for a required disclosure statement that we have to put in at the back end of this video. Now, at SWAN Capital, our market outlook remains cautious because of inflation and the rising interest rate environment. Now, unfortunately, Santa didn't have a rally in the bag to close out 2022. Instead, the Grinch had his way in the last week of the year as the major domestic equity indexes closed slightly lower on the second consecutive week of the light holiday trading season that we had. Now, I know because I was traveling to Costa Rica that Southwest Airlines took a really well-deserved hit, canceling thousands of flights during the busiest travel season of the year. And the housing sector also delivered another lump of coal to investors, with November pending home sales falling to the second lowest level in 20 years. But maybe there is a diamond lurking somewhere in that coal, as home prices didn't fall as far as expected. Other good news was that supply chains seemed to ease in December, creating some optimism that inflation could go lower in 2023. Now, the holiday sales also rose 7.6% during the 2022 holiday shopping season, suggesting that Americans are willing to get out and spend. And I heard clients even tell us that we spent way more than we should have. Now, if you look at the U.S. Bureau of Labor Statistics at the jobs report, it really seemed unchanged at 10.5 million jobs in November. This translates to 1.7 job openings for every unemployed worker, a ratio that the Fed would like to see to continue to decline and shrink. Pre-pandemic, the U.S. was at 1.2 job openings for every unemployed worker. Meanwhile, the unemployment rate fell further than expected to 3.5%, and non-farm payrolls were higher than estimated at 223,000 jobs. So while these numbers arrived better than expected, wage growth missed expectations in a sign that inflation pressures could be weakening. And that's a positive sign for markets. You know, an average hourly earnings were up just 0.3% for December and 4.6% for the year, while expectations were at 5% increases. Another positive sign for markets were service industry activity that showed that more than 2.5 years as demand has weakened in December. The Institute for Supply Management, ISM, non-manufacturing PMI benchmark has remained surprisingly solid month after month, beating expectations, but this ISM number showed lower activity for the month of December at 49.6 versus 55. And what does that mean? It was the first time since May 2020 that this indicator has fallen below 50. The services sector for more than 2/3 of the U.S. economic activity, so this is really a noteworthy sign. Overall, 2022 was a year most investors would prefer to forget or not even have a part of their portfolio, of course. But economic uncertainties, high inflation, and rising interest rates were big themes for 2022. Now, the S&P 500 and the NASDAQ ended the year with double-digit losses, while the Dow actually dropped nearly 9% for the year. It's a fairly safe to say bet that most of us waved a hearty goodbye to 2022 and have already turned our eyes toward a fresh new year. We're getting a clean slate going into 2023 with hopefully better regular routines and a better stock market. Unfortunately, some of the major headwinds that challenged us last year will carry over into 2023, at least for the next few months. After raising the federal funds rate 7 times in 2022 for a total of 4.25%, it appears more increases could be on the way. Then we'll have a few more weeks to wait to see if the Fed's next move is going to be, since its first meeting of the year isn't scheduled until January 31st. Markets could sit stagnant until they have some major news, positive or negative, to move them one way or another. That's going to be it for this month's SWAN Report, and I want to thank you for listening every month to our SWAN Report, and please continue throughout the year of 2023 so you don't miss any SWAN Report and you stay up to date. If you have questions about your personal financial situation and you would like our help, please give us a call at 850-380-9558. Look forward to talk to you soon on next month's SWAN Report. See you then.